Welcome back, investors. Today we're diving into the latest from IREDA, India's renewable energy powerhouse. Their Q4 FY25 results are out, and the stock's already up 5% ahead of the full announcement. Stick with us for the next few minutes as we break down the numbers, what they mean for your portfolio, and what's next. Let's get started. Today we're unpacking IREDA's Q4 results from April 14, 2025. This PSU stock has been making waves, and with a 5% surge pre-earnings, there's a lot to explore. Let's jump into the key highlights. First up, let's look at the headline figures. IREDA's loan sanctions for Q4 jumped 27% year-on-year to Rs 47,453 crore, compared to Rs 37,354 crore last year. That's a massive vote of confidence in renewable energy financing. Disbursements also rose 20% to Rs 30,168 crore, showing they're putting that money to work. The loan book? It's now at Rs 76,250 crore, a solid 28% growth from Rs 59,968 crore last year. These numbers scream expansion, and it's clear IREDA is riding India's green energy wave. On the ownership front, retail shareholders now hold 20.25% with 26.48 lakh investors, up from 19.95% and 25.88 lakh last quarter. The government's still got 75%, so stability is there. But here's the kicker. IREDA's board approved raising Rs 5,000 crore via a qualified institutional placement, or QIP, which could shake things up. More on that later. Now let's dig into the financials. IREDA's growth is impressive, but what about risks? Asset quality is a big focus. While the article doesn't give Q4 NPA figures yet, past trends show gross NPA was 2.19% in Q3, with net NPA at 1.04%. If these improve with the loan book expansion, it's a green flag. The 5% pre-earnings surge suggests investors are betting on that. Disbursements hitting Rs 30,168 crore show IREDA's cash is flowing into projects like solar and wind. With India aiming for 500 GWh of renewable energy by 2030, IREDA's role is critical. The Rs 30,800 crore borrowing plan for FY26 also signals they're gearing up for more. But with a QIP on the horizon, keep an eye on dilution. It could affect share prices. So, how's the market reacting? IREDA shares surged 5% ahead of the April 15th results, a sign of strong investor confidence. The stock's been volatile, down 50% from its Rs 310 peak. But this rally could signal a turnaround. With 26.48 lakh retail shareholders, retail buzz is real, and the QIP could attract big institutions too. Compare this to the broader market. Sensex and Nifty hit new highs yesterday, and IREDA's move aligns with that optimism. The Rs 5,000 crore QIP, approved in February, might dilute the government's 75% stake by up to 7%, but it could also fund more projects. If earnings beat expectations tomorrow, we might see more upside. What's next for IREDA? Their growth plan is ambitious, aiming for a Rs 3.5 lakh crore loan book by 2030, a 6x jump. With Rs 47,453 crore sanctioned this quarter, they're on track. The QIP and Rs 30,800 crore borrowing plan could fuel this, especially with global focus on green energy. But risks loom. NPA trends, QIP dilution, and market volatility could test them. India's renewable push and IREDA's Navratna status are tailwinds. Yet if NPAs rise or trade tensions hit, it might pressure the stock. Tomorrow's full results will be key. Watch for profit margins and asset quality updates. So, IREDA's Q4 shows a PSU on the rise, 27% loan sanctions, 28% loan book growth, and a 5% stock surge. The future hinges on earnings tomorrow and the QIP rollout. It's a stock to watch in India's green energy story. Like this breakdown? Hit like, subscribe, and comment your thoughts on IREDA's potential. Thanks for watching. Stay tuned for more market insights. Take care.